Right, good afternoon. It's September 14th, 2024. I am doing a slight review over this past week. I was asked a couple of questions and since this past week, it's kind of started off in the red and then it ended in the green. And I was asked a question on what are my thoughts on buying a stock when it's in the green. But before I do that, I do want to go over a trade that I just closed out on. That trade being one dealing with Five Below. Five Below, the ticker symbol is FIVE. And that company did very well and things of that nature. I'm going to get into that. But the biggest thing that I wanted to make sure that you're able to see and understand, observe, is one. Let me see if I can actually get the stock up. There we go. Let's start here. Five. The biggest thing that I wanted you to be able to see is when to buy low and when to sell when it's high. Oftentimes that's not something that is given to folks. They don't understand. They understand the concept of buying low and selling high. That makes sense. But where do you know where the low is and where do you know where the high is? So here we're looking at Five Below. Five Below this past week, or at least late August, was showing some significant signs of being low, right? And this is around August 12th or so, right? So if we go to the full-time chart, when we look at the whole entire chart, you can see from that point that I just spotted out on August 12th, we go back using the x-axis to see the time frame. We go back. The highest price that they had was back in last September. Well, probably late August, early September, where it was $237. Yep, late August. So, and this was of 2021. So when I know I said last August, no, it was 2021 in August. That was the high that it had. The last time they came to that point price was now in April of 2023, where it kind of tested it but came back down. So with that being said, we kind of know where the high is. The high is always where the highest price point was, right? In the all-time chart, looking from end to end, when was that high? That high was back in 2021 of late August. So when we see those previous highs, we also want to see if that previous high was tested. And like I said, we mentioned already, April 12th, mid-April, but it was a couple of times over here near late 2021 in November, right? Where it tested the price, didn't quite all the way test the price, but it got near it, right? So how do we know? How do we know that, when's the high and when's the low? Well, we use confirmation confirmation technical analysis to kind of help with that. The very first one is checking out the RSI. The RSI will always tell you that anything that's below 30, 30 is this point over here, right? When you use the x-axis will tell you where you are in accordance with the y. The y will tell you the resistance points, or the relative strength points, I should say. So the relative strength, anytime it's below 30, you'll see it on the x-axis. When it goes below 30, that's where it is extremely oversold. When it goes above 70, that's when it's extremely overbought. You always want to buy when it's oversold. That means that there's a higher chance of this price going up. And that's what happened when we go back to, well, even at this point, what was this? This was September in 2023. It hit a low, and then it went to a high, a multi-day high, going all the way into January. But if we go to that point where we mentioned that the previous all-time high was at 223, you will see it on the chart. The RSI suggests that it was above the relative strength above 70. But the low, after it came off from that high, tested that 30 RSI, relative strength. So those are important right there. Once it tested that relative strength at 30 or just slightly below, which was in October 5th of 2021, that shows a buying opportunity. And then once again, we see that up until November, it went up high, and we see on the RSI that it tested 70 one more time, right? So that's a nice little run. If we look at the price, it went from 165 up until 219, maybe 220. Let's just call it the top, right? So that's a good $55 return in just a couple of weeks, right? From September into early November. So that's that kind of like long-term money gain and stuff like that on the daily chart. And that's another thing I should probably state. This daily chart, if you look at this top left corner, it says max day. The max day means that each candlestick represents one day. So when we start to zoom on and coming into the present moment, we see that the RSI has hit a certain level, a certain support level. Once it starts trading like this, where it's just going sideways, especially after a massive decline, right? It made this decline over here, and it was just going down. And this decline is a part of a phase. It's phase 4. Anytime you see a stock go up high and then start to downtrend very low, you want to see where it starts to settle. And when it starts to settle, it creates a phase 1. Phase 1 means that phase 1 is a buying opportunity. So after that major decline, you create a major buying opportunity when you start to see the price settle. And the price was starting to settle at $75. I believe I bought somewhere near there. Kind of bought on this first red day. After we see that there was a green day here. Sorry, let's try to use my stylus. We see that there is a green day right here. Let's open up the chart a little bit more. And then there was a red day. On this red day, this is when I bought. And then after this red day, it kind of shows more upside. And then the upside right here, even though it didn't go overbought, well, it did. But most importantly, it showed us on the smaller time frames that it made a new high, a multi-day high. So let's start to investigate that and why, selling on that multi-day high will suggest that the price will go down lower. So usually what happens is that when a stock makes a multi-day high, all-time high on the year chart, it has an opportunity to start not just going higher, but then once the end of the day happens, that it will start to trade below the 200 SMA price. And I made another video about that before, where a stock will make a multi-day high after running up so long, and then it starts to downtrend below this red line, which is the 200-day moving average. Now 200 days, a stock price moves, and then it will show you that average price on that 200 day. If I highlighted it, or if let's just do that. Let's just go to, what that price would be. We go to the level 2. The 200 SMA price is 92.72. Once you see 92.72, you have that opportunity now to recognize that it's trading at 96.56. The high was 98.57. Do I want to risk the price going lower, or do I just want to take my profits, allow the price to go lower, and then wait for that run back up against that 200 SMA price? I did what I typically would do, which is part of my rules, is to take my profits once a multi-day high is made. So I did that on this low floater, which still has upside, because we want to see the price come up to this 200-day moving average. That's this red line right above it. That these technicals can be, placed into any trading platform. It's not just one platform that does it. Any platform will have your moving averages. I actually recommend using the moving averages because it takes a lot of stress away from thinking if a price is going to go up or go down. It lets you know if it's trading towards the 200 SMA price, and if it is, usually it's going to go higher. But if not, intraday it's going to come down a little bit and then start to fluctuate from there. But that's neither here nor there. I just want you to see the big picture for now. The big picture is that we saw in the past that when it was trading above this red line, this 200-day moving average, it created a new high, and then from that new high, it came below the 200 SMA price once again. Traded below that, then retested the high. And it retested the high not just that one time, but 2 times, and before starting to trade all the way down. Let's use that stylus once again. It made a new high right up here, trade below the 200 SMA, came down to its lowest point, retested the all-time high. It rejected, came back down, tried it again, went a little bit lower, it got rejected, and came all the way down. Once it came all the way down, and once again wanted to trade towards the 200 SMA price, went up higher again, it retested the previous high. Right, you see it right here, see it right here, right here, right here. This is 4 times. Came back down, and then went back, and then came back down again. Right, went up, came back down. So it's doing this cycle, and then at the end part of this cycle, once it came back down, retested the low, created support, and now we're going back up. When we're going back up, the only reason why I sold this is, once again, I said that it made that intraday high. Once it makes that intraday high, it has to pull back. Now, on the day chart, I have these other moving averages here. This green line suggests that the stock price closed above the green line. This is a 5-day exponential price. This moving average, once a stock is trading above it, it tends to go higher. If it trades below it, it tends to go lower. So you might be asking, well, it's trading above it. Why did you sell? I sold because I would rather take my profits then, knowing that a stock price tends to trade down lower after it makes an all-time high. I'd rather take my profits then. I'll wait for the stock price to trade lower, and then buy it at a lower point near that, below that $92 point that we just saw on the on the intraday price. So let's go back to the intraday, 5-day intraday. Each candlestick represents, I said 5 minutes. Each candlestick represents 5 minutes, and this is 30 days. So as we look at these candlesticks, remember we said this is the 200 SMA price on the intraday. I wanted to trade below that. Once it trades below that, find some type of support, then I re-enter on and then ride the way back up again. And so when we have that as an indicator, and this might seem a little bit fast, but I guarantee if you watch this over and over again and then compare it to what's happening in the actual market right now in real time, you will see that this cycle tends to happen. It will make a new high, pull back, it's trading above the 5 EMA. Once it pulls back, it might start off with a red candlestick for the day, and then by the end of the day, that candlestick will turn green and then continue to go higher because the stock price started to trade below the 200 SMA price. Now that it's trading above the 5 EMA, we just anticipated it to go higher, hopefully near this $150 price that's close to that 200 SMA price. So this goes to linking on the next question. We ended on a green day with this stock. I sold it, took profits, that's fine. You can't go broke taking profits. So if you're looking at entering into another trade, why would you buy on the green day as opposed to a red day? So we'll use the example of Dell. Dell, I ended up buying it on a green day, mainly because of where it is on the chart. Where it is on the chart, it shows that, if you remember when I mentioned the phases, we talked about that there's a phase 1. Phase 1 is usually accumulation. Phase 2 shows an uptrend. Phase 3 starts to level out, and then phase 4 shows a decline. So right here, we'll see it on Dell. This is all phase 1, where it just accumulate and accumulate. From here in this accumulation, it pops up. This is phase 2. It did come down immediately because more than likely it's traded, and I'm just seeing this now. I'm talking about it right now in real time. It traded above the RSI, which is above 70, and because it traded above 70, that means it was extremely overbought. People sold, the price came down. So right here, leveled out, phase 3, and then start to decline phase 4. Started to accumulate it again, went to phase 2, leveled out phase 3, came down phase 4. Started to accumulate again in phase 1, went up for an uptrend to phase 2. I believe it came out with earnings right around here. But even though it came around earnings, it made an all-time high. Once it made that all-time high, it came back down, and once it came back down, did it try to retest the previous high? Yes. It made this nice little spike to 160, but got rejected and came all the way down. So once again, we can call this phase 3, went down to phase 4, and went to phase 1, phase 2, leveled off, phase 3, came down, right, that was phase 4, and once again, phase 1, but right here on phase 1, it showed a decline. So we can say that this is a continuation of phase 4. After hitting phase 3, came down to phase 4, and then continued with phase 4. Now, we're trading below what? The 200 moving average. SMA, 200 simple moving average. It made that trade below that, found support close to the $80. And then once it bounced, it went from phase what? 1 to 2, then went to 3, came down phase 4, and then started to trade sideways again to phase 1. So, yes, I bought this on the green day, mainly because of where it is on the chart. And where it is on the chart, when you look at candlesticks and, when to determine when if a breakout can happen. A breakout usually occurs when you have the moving averages coalescing here. We have the 5 EMA moving average coalescing with this yellow line, which is the 20-day moving average, along with the red line, which is the 200-day moving average. When these moving averages start to coalesce together, and it's trading, especially now that it's trading above the 5 EMA, that green line, the exponential moving average, the opportunity for it to go higher is there. It created a candlestick right here. It's like a hammerhead candlestick. It's retesting the previous resistance, which is close to, what is this, probably like 115, maybe 116. Is testing that. Once it's testing that resistance, the only thing that it has to do now is go a little bit higher. But then we'll check it on the RSI. The RSI suggested that the price did come down, and then it's nowhere near being overbought. It's nowhere near being oversold. The point where it was oversold was back here, which was, what day was that? That was closer to August, mid-August. So once you're near mid-August and you see that it hit that low and it found support and it started to go up, and then finding accumulation once again, phase 3, and then came down phase 4, and then you see that it's accumulated again, phase 1, now you have the extra confirmation of the RSI. Then what if you say, oh, okay, well, the RSI confirmed that, is there anything else that will confirm it? Yes, the candlestick, the green candlestick, the 5 exponential moving average, that confirms it. And then we also have the MACD. This MACD over here, over on the left, means for momentum, I forgot. I forgot. But it's pretty much a moving indicator. I think it's convergence, divergence, like momentum. I can't remember what the A stands for. But essentially, at the end of the day, the MACD will tell you about the momentum. And the momentum is showing that these lines right here are going towards this x-axis 0 line. Once they start trading above it, it only shows higher moving average or higher price action. And we'll see that demonstrated in the past, like in March, where the green line started to trade, or not the green line, but just the green and the purple line, I should say. Both of them started to trade above the x-axis and then went a little bit higher. Once it went higher, so did the price. The price also went higher. When it started to trade a little bit sideways and down, then it went back up. The moving average made a new high, and you can see that in the MACD. And then when the price started to come back down, you see it in the MACD. The momentum is telling you already. So you have a couple confirmations there. I just gave you 4. The first one was using the RSI. Well, the first one was finding out where the price action is on the chart. What phase is it in? Is it in phase 1, 2, 3, or 4? Phase 1, accumulation. Phase 2, acceleration, upside. Phase 3, decline. Phase 4, coming down. Phase 1, accumulation. So right now, it's back in Phase 1. We had the candlestick, Phase 2. We have the moving average. That's another 3. And then we have the MACD. That's 4. Right? So we have all these confirmations that are happening all at once. So yes, bought at a green day. If we go intraday, we look at the 5-day moving average. We see on the 5-day moving average that no new high was recorded, and that the simple moving average, that red line, the 200-day moving average, is kind of close to where the price action is trading at. So if we look back on the past 30 days, the previous high is $120 a share. Where it's trading at $114 a share. So that's a $6 on upside movement. Let's say that it does pull back, right? That it does, for some odd reason, Monday, some economic news comes out and it starts to pull back. Well, it's not that far, right? It can trade to or below the 200-day moving average, but it'll be near previous support. Previous support is near $111. You have the opportunity to add, where you can average down. And now that you want to average down, and let's say that you have a contract that doesn't expire for another 2 months, you have a lower price. Let's say you bought a contract that doesn't expire for 6 months. You bought it at a lower price. Doesn't mean that you have to put all your chips in at once. Maybe just take a nibble. And then with that nibble, if it shows that, hey, it has more upside to go up, then look, now you just generated profit. But if it does pull back, then you have an opportunity to find, well, it pulled back. Is it at support, and is it holding support? And if it starts to hold that support, then you purchase a little bit more and then allow that support to hold, and so you can ride the upswing of the trade. So yeah, I bought this one on a green day. And a good common rule is to buy when stocks are on a sale, when it's on the downside, but there are often times where a chart will provide an opportunity to buy a stock on a green day. This is a green day. Then it made a huge exponential move, like 10%, 20%. It made a lousy almost 2% on the day. You see it right here, 1.92%. So because of that, these were some small factors that show that there's upside there. Also, economic news. If you go to the economic calendar, maybe on NASDAQ or something, maybe even on Google, they'll show you what is happening in the upcoming week. This upcoming week, starting September 16th, we will see some economic news that's around retail. Dell is a retail company. Dell also came out with good earnings. So, a company that has good earnings, the consumer price index seems like the consumer is willing to buy stuff. This is part of that, the flow of the market. So always go with the flow of the market, never go against it. You find out where you are in the phases, 1, 2, 3, or 4. It's called the Wyckoff method. Once you find that and you see all these other indicators that are suggesting upside, then you place a trade. So this is it. Hopefully that helped, when it comes to finding out, whether you should buy a stock on a green versus a red day. And if you're just gambling, you want to make sure that you're following the flow of whatever company it is. You see some of the companies that I am holding here. You could start with ASTS, that's a aerospaceship company. We have Dell, we just talked about. AVGO, that is Broadcom. They have a lot of arms around in technology, particularly with semiconductors, and their profitability is very high. But there is this one more company that I want to talk about, which is Beyond, also formerly known as Bed Bath & Beyond. Bed Bath & Beyond, it's a low flow stock. This low flow stock, what I mean by low float, we're talking about 45 million shares are available to trade. You compare that to a stock like Dell that we just covered. It has 702 million shares that are tradable. You could trade that, use that same with Broadcom as 4 billion shares, right? That are tradable. So when we look at that, we see, oh, this is really a real low float stock beyond. And they had a lot of trouble before in the past, dealing with, brick and mortar and, their profitability. They did some stuff with Overstock.com. And, since Overstock is such an internet player, retail player, Beyond did the same, using that same strategy to allow their profitability to be raised. So we're starting to see the same thing in this stock right here, kind of move the same way as Five Below, which was also another low float stock. So we see that, let's go through the phases. I end up purchasing this stock on a green day, right? And we see that we have phase 1, accumulation, phase 2, it went to a top, came down from phase 2, went to phase 3, found that top, then came down phase 4, right? This is a little bit of phase 4 and some phase 1 right here. This is phase 1, came back up phase 2. You see how clear it is. Phase 3 went all the way down phase 4. Look at that decline. And remember, it was trading above the red line, that simple moving average. Once it started to descend below that simple moving average, it found some support, traded, and then went back up to phase 3, or phase 2, then phase 3, then came back down phase 4. Found phase 4, found a little bit of support, but it also was trading below that 5 EMA. So it never really got a confirmation here. Maybe if you look at the news mid-June, you'll see why it spiked and then came back down, but it started to trade below the 5 EMA, showing you that it was going to decline. It did go up and then came back down. But you see, you can count out the phases here. Phase 4, phase 1, phase 2, 3, 4, 1, 2, 3, 4, phase 1 again, right? So with this phase 1, now we're seeing that the stock is trading above the 5 EMA. It did have some pullback, but it's still trading above the 5 EMA. This candlestick is indecisive. It's showing that it has some type of upside, but it's indecisive because there was a sell-off towards the end. But it's still being encapsulated here with a strong green day, red candlestick, trading above the 5 EMA, and then here we are. We're ready to retest this $12 resistance. And there is resistance here at $12. And you see when they did the accumulation on phase 1, there it is. It was bouncing off of 12. So previous support became resistance now. So we have this upside to $20 that's possible. I'm not saying it will get there, but I'm saying that this $8 of upside potential outweighs this downside potential of going to $11 and even $10. That's $2 of downside, $8 of upside. That's a 4-to-1 ratio. You can't beat that, right? So you start using the RSI. You see that it's not overbought. You see that it's not oversold. It's just tapped off of 50 and it's going a little bit higher after being at its all-time low, right? And then from that low, we see that the MACD is also starting to trade towards that zero line. So we're using these confirmations one more time, right? So hopefully this is helpful, right? I gave you a lot here, but really investigate on the phases. Once you start to see the phases, you'll start to see them on every chart, and then that will help you to buy when it's low and then to sell when it's high, right? I'll do it one more time with CrowdStrike, right? You'll see here, right? And I bought CrowdStrike earlier in the week. It went from phase 1, and a part of this phase 1 is going into phase 2. Phase 3, leveling off, came down phase 4, leveled off phase 1, went to phase 2, leveled off at phase 3, came down to phase 4, leveled off phase 1 and 2, phase 3, all the way down phase. And what happened? Made an all-time high. This had to happen. When the all-time high was made and it leveled off, all you have to do is just wait for it to come down. When it comes down, you buy. This is a buying opportunity. Green candlestick, buying opportunity. So that's phase 4. Started to accumulate phase 1, and then started to go up phase 2, It started to trade sideways, phase 3, then came back to phase 4, and now it's at phase 1 again, starting up to phase 2. So look at that, another example of how this Wyckoff method works. And use it in your favor, because this will truly help you to just observe the flow movement of a stock, right? And we're seeing these, like how many phase 1, 2, and 1, 2, 3, and 4 you can be able to pick out. And then as you pick it out, maybe you start to think like, maybe I would buy here. But when you buy below the red, this is the last point, you can look it up. But when you buy below this red line, that 200 moving average, and then it starts to trade above, the price actually starts to trade above the 200 moving average, that is called the golden cross, where you start to see the stock price start to move on up. So I gave you a lot of gems here. Hopefully that this will all help you in your journey. It took me some time to see this, understand this, but now that I see it, it helps. And yeah, I just want to help. I just want to ensure that I help you as well. So thank you so much for just enjoying, and I'll see you on the next one.